Good morning. Good morning from Los Angeles. Beautiful Granada Hills. Um, for some of you who don't know where that is, it's northwest of downtown Los Angeles by about 30 miles. About 30 miles from LAX, north of LAX. Beautiful little spot. What's going on? Is something going on today? Oh, yeah, the Fed. Anyway, so good morning. Interest rate decision day. All expectations are that they're going to cut another quarter point and another quarter point in December. We're going to do a deep dive on why they're cutting rates. Should they be cutting rates? So, um, if any of you would like to come on and talk about it, I'm not sure if I'm going to go through the 11 o'clock hour because volatility is going to pick up. I may have to adjust some positions. Gotta focus on the money. But if any of you would like to come on, in the meantime, here's the link. Here it is. Grab the link and show up. We can discuss interest rates. We can discuss the melt up we've been experiencing this week. We can discuss don't fight the Fed. We can discuss crypto. We can discuss DATs, digital asset treasury companies, and the misconception of pretty much everyone on X, because they just keep putting chopsticks on BMNR chart saying it's about to break out. Breaking news is not going anywhere. It's not going to go anywhere unless the dog starts moving. What's the dog? ETH, Ethereum. If dog don't move, tail ain't gonna move. Tail's not gonna wag the dog, folks. Sorry. Then we have the usual melt-ups. NVIDIA, $5 trillion market capitalization. One single company, larger than DAX and the London Exchange, I think, combined. Incredible. It goes to show the ingenuity and the power of the American economy and some of these companies. Microsoft broke 4 trillion. Apple broke 4 trillion market cap. We're talking trillion, folks. So goes to show what happens with patience, goes to show what happens with perseverance, right? If you're invested in these companies. The other thing is when a lot of talk obviously is going on about the Buffett indicator, all that stuff, kind of meaningless, really. Yes, the Buffett indicator is at an all-time high. What does that mean? It's been at an all-time high. It's been making all-time highs for the past God knows when. Are they meaningful? Yes, of course. You should pay attention to it. Should you make a decision on your portfolio and trade or invest with that? No. I've been saying this and I keep saying it for decades, literally. High frequency trading, this, that, all that, right? There is a price on your screen. That price is unquestionable. You could have your ideas, you could have your biases, you could have your thoughts. It doesn't mean anything. You could argue with something with the price that you see. You may think it's overpriced, you may think it's underpriced. But then again, the price at that second is where the transaction is taking place. There's a buyer and a seller at that price. That's the price that's been decided on. You cannot argue with that. And a lot of folks do. But then that's how we make a market, right? I think it's too high. You think it's too low. You think it's going down. I think it's going up. And supply and demand, Why do stocks go up and down? People ask me that all the time. I pretty much just bring it down to the simplest form of explanation, which is supply and demand. Why did egg prices go up, shot up to $20 a dozen? Supply and demand. Could there be other things going on? Could there be some shenanigans going on? Potentially. But all I know is that's the price at that minute, at that second. And I have to do a transaction or sit. You don't have to do something about it, right? So good morning, everyone. We'll get into a few topics today. We'll get into why the Fed is cutting rates. Good morning, Luis. Good morning, Doug. Where's my green hat? Okay, watch it later. There's always a replay. What is wrong with BZAI? I don't know. Is it down to 410 buying range? Stocks, remember, Doug, stocks go up and down. Yes, today the expectation at 11 a.m. the Fed will announce that they're cutting the short-term rate, Fed funds rate, by 1/4 point. Let's get into it. I put the link up, by the way, if anybody wants to show up. It's right there in StreamYard. You don't need, all I'm asking you is you're in a quiet place with a decent internet connection, unlike mine. So why are they cutting rates? Okay, stock market all-time high. Gold with a little correction, but still very close to all-time high. Cryptos are kind of struggling for the past few months. But then, okay, they're pretty close to 10% from all-time highs. All asset classes all-time highs. Okay. Number two, inflation is not in the box. That genie that came out of the box because of ZERP and easy monetary policy for 15 years, who has not been able to put back in the box. Fed mandate is blown. What's the Fed mandate? 2% inflation with full employment. No, both are going the wrong direction. Inflation is definitely not 2%. And I don't even think it's 2.6, 2.7%. I think it's a lot higher than that, but that's debatable. Unemployment's ticking up, yet the Fed's cutting rates. So the history of the Fed is that they do not cut rates when there is no trouble or when there is no trouble ahead. So this latest round of cutting is not happening because President Trump is calling Powell stupid. It's not that. What is the Fed seeing? Fed seeing unemployment rate ticking up. You guys notice yesterday the layoffs at Amazon? 30,000 more people. These are all people are getting laid off that have decent jobs. So just in the major companies, like today, GM, right? Engineers are getting laid off. So is the Fed seeing trouble ahead? Is the market pricing in trouble ahead? That is definitely a no. Market's thinking lower rates are positive long term, especially for the markets. I do agree. You don't fight the Fed. But the thing is, it's very peculiar that when all asset classes are at all-time highs, Fed is cutting rates. So are they going to pump the bubble? According to some folks, we're in a bubble. Again, you can label all these things all you want. For me, as a trader, the price I see is the reality. The rest, sure, we can have opinions about it, but none of us know where the market's going to be. If anybody says so, run the other direction because they're BSing. So you go with the flow. You trade what's in front of you. You cannot be biased. If you are, like, if you're bearish here while the market's making all-time highs, especially if you were bearish last Friday, going into today, yesterday, and Monday, you got your face ripped off as a trader. Now, shorts are getting obliterated without a question. But then going back to the interest rates, if the Fed is cutting rates because they see trouble ahead, Are stock prices expensive? Is the S&P 500 expensive? Well, if you look at the earnings season so far, S&P 500 is on track to earn about $265 to $275 a share. That's the combined earnings of all 500 companies. Well, we're about 7,000. So what kind of multiple should we put on that? Especially with the interest rates going lower, as we know, multiples get jacked up. Okay, so let's do it. Let me take my calculator out and let's take a look at it. Let's take a look at it. So let's say 7,000 on SPX divided by, let's be optimistic. Let's go with $275. We're at 25 PE. Now, is PE a good indicator? However, there's something going on that I actually started paying attention about last week. Not the Buffett indicator, not the Schiller indicator, not the PE, because PE is like, that's antiquated. I don't know when people pay attention to PEs. That's why Warren Buffett, I mean, my hat's off to the legend, but he's sitting on 350 billion in T-bills, right? I mean, he's not involved, obviously. Well, I also want to talk a little bit about the 7 trillion in money market that's sitting there that people think that's all going to come into the market and we're going to melt up some more. I disagree. I don't think that money is going to come to the market, into the market. So a couple other things. Fed's cutting rates. If the Fed is seeing trouble ahead, market's expensive. If the economy is going to slow down, all these layoffs are going to take hold. There's going to be more layoffs. This is without AI kicking in fully, by the way. Maybe AI has kicked in 10% into corporate America, 20% maybe. What's going to happen? Are there going to be more layoffs? So that's a maybe structural or societal question we need to answer going forward next probably few years. But Fed cutting rates here, I don't think I've experienced this before. I think at one time the Fed cut rates was about 2008, middle of 2008, and we know what happened after that, but this is not a similar situation. So overall, if the Fed is cutting rates because they think the economy is going to slow down, because unemployment's ticking higher, because they're trying to be preemptive, they're not going to care about the bubble getting larger. Their job is to sustain growth. Their job is to sustain lower unemployment. But then if you look at the unemployment numbers, one statistic that caught my eye the other day on Fred is the unemployment rate on the recent college graduates is 2x of the national rate, almost 10%. So these college kids who come out of college with a couple $100,000 in student loans are not even able to get a job. And is it going to get worse with AI? Well, I don't know. It seems like it, right? So there is a lot going to happen that we need to watch for in this country for the next few years, especially when AI takes hold. We don't even want to get into the AI push. So one other thing I wanted to mention here is that a lot of folks, which actually on that one I agree, I started paying attention to this maybe about a week ago. A lot of folks are saying that the S&P 500 is going up because 10 stocks, literally 10 stocks out of 500 are pushing the index up. I agree. For example, on a very strong day yesterday in the index, if you look at under the surface, about 380 stocks were down, red, in the S&P 500. So the advanced decline line is not confirming these new highs. These new highs are getting thinner and thinner with the generals taking the charge. Generals, as we know, the NVIDIAs, the Googles, the Apples, the Microsofts, the Metas, the Teslas, the top 10 stocks. And so generals, when the generals are taking charge and going into battle, that is not a good thing. It should be the other way around. It should be the soldiers should be going into war. The generals should be in the background. Now, you're going to say, well, generals are not going to get shot, though. Well, we don't know, right? So earnings are coming out. They seem to be good. Today, this week, we have a bunch of more Mag 7 earnings. Last week, we had Netflix and Tesla. But again, underneath the surface, the market's not healthy. Above the surface, new all-time high after new all-time high. The point again is Fed cutting rates. Is the Fed cutting rates because they see trouble ahead, economy slowing down, market at 25, 26 PE? Is that sustainable? When I say market, the index, the S&P 500, is that sustainable if the Fed thinks the economy is going to slow down? Is the market pricing in any slowdown whatsoever? I don't think so. Look at the prices. So, there is a lot of cross currents, but then my job is for myself and my members is to read the tea leaves correctly and make sense out of what's going on. So that's that. Another thing that I would like to talk about is um, when Fed, I think more than cutting the interest rates today, the language, the tone is going to be very important in their announcement. Already Powell last couple of weeks ago in one of his speeches, he indicated that QT is going to be done with. Well, if QE kicks in, if we need QE, I don't know if they're going to go from QT to QE, because now they have room actually to do QE, meaning their balance sheet, the Fed balance sheet, has actually been declining for the last year and a half or so, from about the high of the pandemic levels from 8.5 trillion down to almost 6 trillion now. They have some room for QE. But again, all asset classes at this level, what's going to happen? I don't know. I mean, I'm not bearish. I can't be bearish. There's no reason for me to be bearish. I'm just watching the pricing, and then the price action tells me momentum is there. Markets are making the all-time highs. The usual suspects all making all-time highs today. Nvidia up another 10 points today, just breaking 5 trillion. Palantir is breaking out today. If you're a technician, let's say, the stocks are telling you the story. You can't be bearish here. Now, of course you could be bearish. It's your opinion. But then my thing is, I can't be bearish here at the moment. So, one other thing that, before I forget, and looking at my notes, is there has been some trouble with the regional banks. Some people are calling if there's one cockroach, there's going to be another one. There have been a couple of major bankruptcies. One, a subprime auto lender went bankrupt. Fortune Brands went bankrupt. A lot of losses are being talked about in the regional banks. Private equity being in trouble. Look, all these things are valid points. But the market's reaction to any of this is very muted, if not bullish, right? And the Fed's repo facility, right, down to zero. But then Fed keeps pumping in some money because it seems like there is, on the overnight lending markets between banks, there is a little bit of a trouble. So there is a lot. There is a lot to digest in here, right? For the uninitiated, means nothing. My stock is going up. My portfolio is an all-time high. No concerns. I agree. You shouldn't be going into as deeply, because then you can get paralysis through analysis. And I am guilty of that sometimes, because I do pay attention to quite a bit. And then, I can't make myself YOLO like some of these Robinhood boys are doing. Although, look where they are with Beyond. I mean, not Beyond. Well, symbol is Beyond, obviously. Beyond Meat, right? So, pump the stock from 50 cents to $10 down to $1.80 or something, right? But then these people on X and wherever they are, when I see them, I'm on X active, they don't quit. They go, I bought another 1 million shares of Beyond. Okay, it's your money. That company is probably not worth the paper it's printed on. It wasn't until the short squeeze or gamma squeeze happened. I don't know. People are just committed to certain ideas or ideologies or whatever they are. I don't want people to get hurt, but when a stock goes from 50 cents to $10, and your expectation is what? That company literally went from bankrupt after diluting the shareholders to being $4 billion in 4 days. I'm very surprised, actually, that Beyond Meat did not do a secondary, squeeze a secondary, but they already had issued shares, diluted the existing shareholders to the tune of 75% because they had to pay the bonds back, right? That's another thing a lot of folks don't understand. You know, the corporate structure, right? The debt always comes first. Preferred stock comes next. Common stock is the bottom of the totem pole. If you're holding common stock, you may not be worth the paper it's printed on. But then we trade common. Most people understand common stock. Well, when you dilute your shareholders by 80% to pay back the bonds, which you had to, stocks, and then YOLOers get on top of it. Stock traded, literally, stock, I think, traded every single day. The float before the split, before the dilution was about 75 million shares. That stock was trading like 600, 700, 800 million shares a day. It's possible, obviously. There's a lot of naked shorting going on. There's a lot of, stuff going on. So look, I have a position in it. I have a put credit spread. We'll see where that ends up coming up on Friday in a couple of days. It should be all right. But, hope and pray will not get you where you need to get to. And a lot of folks seem like they are in the hope and pray camp because they have an idea. They read it somewhere that Beyond Meat is worth this. I don't know. It may be. But again, and again, do not question the price you see. The price you see is the price transactions that are taking place every millisecond. Another one, hot name, I'm in it heavily with options, is ASST. Strive Inc., Vivek Ramaswamy's company, which turned from a medical company supposedly to a DAT, digital asset treasury company. They're in the takeover process of Semler Scientific, which is another medical company, equipment company, but they had Bitcoin. And Mark Alfred, I don't know the gentleman, but I guess he's got a massive following on Twitter. He said he bought 1 million shares and stock went from 60 cents to $1.80 in a couple of days. And then now I'm seeing nothing but tweets on that. People are buying million shares of this, million shares of that. Buyer beware. Do you know what you're buying? Especially with these DATs, do you know what multiple to net asset value is or market cap to net asset value is? You don't have to know much. If you go look at the chart of Bitcoin and look at the chart of Strategy, MNAV is getting crushed on all of these. I'm involved in a couple of DATs, like SharpLink Gaming, which I think is probably best in class, probably outside BMNR with great management and staking capabilities. That thing is down to 0.82 MNAV. A lot of people are putting like, oh, all of this should be at a premium. I'm like, no. The Wall Street game has been, buy Ethereum and short all of these stocks. And they're made up tons of money doing that because MNAV is getting crushed. And when I see folks talking about BMNR going to here, going to there, I laugh. And then they have massive followings, like 50, 100, 200, 300,000 followers on Twitter. And then they put a thread up and put a chart of BMNR up with some technical indicators. And they go, oh, BMNR is going to do this. BMNR is not going to do anything, bro. BMNR is not going anywhere. Nowhere. If Ethereum doesn't go up, BMNR is not going anywhere. If Ethereum doesn't go up, SBET is not going anywhere. What if Ethereum goes to 3,000 instead of 5? Then what? BMNR is a $25 stock. Simple. So, there's a lot going on out there. One last thing about two things I'm paying attention to, honestly. Underneath the surface, the market's not healthy. That's a fact. And margin debt is at an all-time high. That's not good either. And we know what's going on with these 3x ETFs. Now they're bringing out 5x ETFs. People just cannot have enough of these things, leveraged products, right? And then again, buyer beware. Think about slippage on ETFs. These 2, 3, 5x ETFs, they don't own the underlying. They own swaps and options. Every time they roll, you're going to have slippage. You're going to lose money. Obviously, they're not to be bought and held for long periods of time. But then a lot of people think this, you can treat an 2x, 3x, 5x ETF like a stock. You can't. Again, simple is look at Tesla. Tesla is at an all-time high, and look at TSLL. Last time Tesla was here, TSLL was 40. TSLL is 21. Right? If you had bought TSLL and held it for a year, you'd be down 50%, while Tesla is back to where it was a year ago. So a lot of folks look, a lot of these people out there who trade these things and talk about it, I don't think they have a fucking clue. And if you're one of them, come here. I put the link up. Let's talk about it. Because to me, there's so much, garbage out there that when I look at it, then I go, I hope some person doesn't get hurt following this, person that's just, I'm not saying they're putting out misinformation. They're just talking their book, which is what the clowns on CNBC do every day. But I see, I don't see a good end to this, right? But then again, buyer beware, right? Do your own due diligence, but we don't do that anymore. I mean, social media has a lot to do with it. People with followings, they just say something and something moves. Okay, but then again and again, the price is going to tell you the story. Initial short-term pops, yeah, that'll happen. And if you're nimble enough to trade it, good. But if you're thinking, open was another one, right? Open door. And so to me, just be careful out there. And all I'm saying to you all is that use the head, use the brain a little bit. Think of what you're doing. Think of what you're buying. And I'm cautious, but then I can't be bearish. After today's interest rate cut, I don't know, we'll get some volatility. We'll probably do get a little bit of a sell-off afterwards, my opinion, because we've gone up so much in anticipation of the cut. I think the language is going to be important. I think if they say we're going to do QE, watch out. I mean, melt up is going to continue, but yeah. It's interesting. We have interesting days. We have AI coming around, all these layoffs. I feel for those people right before holidays. There's going to be more of these layoffs. Is the Fed seeing that? What is the Fed seeing? Why is it, I would like somebody to explain to me, why is the Fed cutting rates? Why? I can't, I don't know. I think about it. I thought about it. I'm just saying they're being preemptive because they're seeing trouble ahead. On the other hand, the market's saying, oh, Fed cuts rates, market goes up. Not necessarily, not always. If you do look at Fed cutting cycles, there is a chart out there that I put out on a video. It's probably, the trouble is probably 6 months out, because the real economic, by the way, we're not getting any economic data because the government's on strike. These people in Washington. And if you look at Fed rate cutting cycles, they're about 6 months after, 8 months after that, trouble starts. That's when the real economic weakness shows up. And markets don't do well, actually. If you want to debate that, you can come on and debate that with me as well. Bring your own charts, kind of a thing. So, you study the Fed cutting rate cycles. Okay. Study 2000, study 2008. That was a real economic problem, right? The GFC. Fed was cutting rates all the way through the middle of 2008. And then what? Shit hit the fan. And was that enough? Cutting rates was not enough. Obviously, the bloodletting had to happen. Same thing during the pandemic. Same thing during every, economic slowdown. Interest rates going down is not a good sign for the economy. It's not. Is it good for stocks for a short period of time? Yeah. Yeah, you can't fight the Fed. Although Fed has lost all power, that's the way I believe. Fed can control just the short end of the curve. They cannot do much about the long end of the curve. The long end is going to do what it's going to do. The long end has been kind of trickling down, but mortgage rates have trickled down a little bit, and but still 6.5% on a 30-year mortgage, pretty high. Home affordability is in the tank in the country. Nobody can afford a house. Well, the other thing, the reason is real estate is an asset class, right? Hard assets. Well, when real estate has gone up quite a bit, so the affordability index, home affordability index, is in the tank. Who can buy a house these days? Come buy a house in California these days. Impossible. With the mortgage rates and with the prices that we're seeing out there. But then again, a lot of people go, oh, real estate is great. I'm like, yeah, okay, real estate is great. It just keeps pace with inflation, though. You know, I know it from my own house. I've been in the same house you guys see in the background for 22 years. Yeah, it has doubled and more. Okay. So what's the inflation? Just kept pace with inflation, really. What has done better? Stock market to a point has done a little bit better, right? Top 10, 11% a year versus real rate of inflation is probably 5, 6%. And look, I'm just going to trade what I know. I'll step in heavy if I need to in some things when I do have full commitment. But again and again, you know, don't question the market. Market's always right. Market's here to make you and me wrong simultaneously. And I don't day trade. I don't do YOLO. I don't do FOMO. I don't do any of that stuff. And I do miss quite a bit of these moves, you know, the beyonds going from 50 cents to 10. I mean, look, if you're a technician, you probably made some money. But when I look at it and I go like, this thing is not worth the paper it's printed on, I cannot make myself come and buy it at $5, $6, $8, $10 a share. I just can't. And, you know, did I miss some good opportunities this year? Yeah, open was another one, 50 cents to $10. There's many, you know, all these AI power generating stocks, right? I mean, all these quantum stocks. It's like you can eat. Look, you have two choices. You can play or you can sit. I traded it. I traded it on the short side. I traded it. I'm on the long side. But to me, it's like I cannot make myself go buy a quantum computing stock with zero revenue at a $30 billion market cap. I just can't. And a lot of folks do, though, because they go like, oh, that's the next NVIDIA or that's the next this and next that. Okay, cool. But when the music ends, don't cry. It's buyer beware. That's all I'm saying. And so we're going to wait until 11 to see what the Fed is doing. I have some positions. I trimmed some today. We'll see. We'll see what happens. I'm mostly involved in debts at the moment, and I'm buying the ones that are under 1 MNAV. So yeah, that's what I'm doing. The rest is the rest. So let me go through the positions real quick. Yeah, I think I'll just cut it off in about 15, 20 minutes unless somebody decides to come on. Oh, let's do housekeeping a little bit. So I go live every Monday and Wednesday, trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. I go live on Fridays, called Power Hour. Finish the week off, do some analysis, to go through my watch list, what I'm going to watch next week and all that stuff. So that's also 10 a.m. Pacific, 1 p.m. Eastern. Today, Wednesday, members, we're going to have a live, members only live every Wednesday, 4:30 p.m. Pacific. They're learning quite a bit. If you want to become a member, go click join on the YouTube channel and send me an email, sergio@sergioavadian.com. I will send you the Telegram chat group link because I do post all my trades live on the Telegram chat group link. None of this is trading, financial, or investment advice. Do your own due diligence. What I do is very risky. It fits me. It may not fit you. Your account size may not be proper, all that stuff. So that's that. Last but not least, right up top, I posted it here. I have a new website, www.sergioavadian.com. If you do go subscribe to the free newsletter, free FREE, you get a newsletter 12 Pacific every Monday. The second one went out this past Monday. I'm on a mission. I'm on a financial literacy mission for gig workers specifically, but for everyone in the country because financial literacy in this country is in the toilet. Just like our fiscal and monetary policies in the toilet, just like the US dollar is in the toilet, I think financial literacy is a must. I've done a lot of videos on my channel about You are in charge of your own financial future. Government's not going to help you. And like I said before, unless you have rich daddy and mommy, you're not going to get any help. You're on your own. Well, you got to figure it out. And keep it simple, stupid is the way I operate on the website. I'm not selling you anything. All I want is your email so you can start educating yourself, because I think proper information and proper education is lacking. Social media has a lot to do with it, obviously, because every YOLOer is a fucking analyst these days. I'm going like, whatever. Well, you can follow them and, make some money when the market's in a bull market, but then, we'll see when the coin flips around and then the other way down is pretty brutal. So when it does, I don't know, but when it does, I know I'm not going to get hurt and I'm not going to blow my account. So accounts, more like a trading and investment account. So please go subscribe and please share. The 2 articles we sent out are on the blog of the website. Financial literacy is key. Believe in something, understand something, study something, as opposed to flipping TikTok and watching some shorts on YouTube or whatever. Go start reading, man. Go start understanding things. And you don't have to make it complicated. Just simple things. Power of compounding, rule of 72. All these things are so important just to start investing, because I believe if you don't invest, you're going to be left behind. Now, don't ask me, what do I invest in? I'm like, there's so many tools these days. Invest in dollar cost averaging, all these things, right? ETFs, gold, and look at all these asset classes. If you don't invest, you're going to be left behind, because the government gaslighting is going to continue. They're going to make it look like everything is fine. It's not. Everything is not fine. Go talk to those 30,000 people who got laid off from Amazon. Everything is not fine. So what you need to do is you need to start educating yourself. You need to play like the top 5% play. What did the top 5% do? They collect hard assets nonstop. Let it be stocks, let it be real estate, let it be gold, let it be whatever, right? Do what they do. They've had pretty good success, right? So, but financial literacy is key. So please go subscribe to the free newsletter. Again, I'm not selling you anything. I don't want anything. All I want is your email, and so I can send you. And then go talk about these things with your family, with your kids, with your cousins, with your relatives and friends, right? So everybody should invest. And if you tell me, oh, Serge, but market's so high, okay. Long periods of time, market has done extremely, extremely well. Yeah, did we have dead zones for 5 years? Yeah. Did we have crashes? Yeah. But then go look at a 20-year chart of the S&P 500. It's done extremely well. If you just put money in there, right? Every first of the month, put $100 in there. In fact, one of the articles that went out was, $100 a month. 40 years, that's $1.2 million. That's the power of compounding, folks. So I want to, educate and inform properly. No hype, pretty simple stuff. And then it can get as complicated as the stuff I do in my trading account. But there's going to be something on the website for everyone. If you're an advanced trader, obviously YouTube side and the Telegram chat group. And what I do in my account, I post my account, by the way, every Monday, Wednesday, and Friday. Full transparency, wins, gains, losses, all that stuff on the community page of the YouTube channel. You're more than welcome to check it out. I'll post the screenshots of open positions at the end of the day. Today is one of those days. I will post whatever I'm holding. Again, none of this is trading financial advice, okay? And I run it with full transparency. I have nothing to hide. I don't have to impress anyone. I'm me. So you like it, you like it. You don't like it, move on. I don't day trade. I swing trade. I position trade. Stocks, options, whatever. Oh, we did something. I don't know what we did. But so in that sense, let's just go see what we did. What are we doing? Oh, okay. Interesting. Oh, okay, cool. All right. Hey, members, I did something right. What did I do right? Let's go to the positions. Here are my existing positions. So Strive Inc. ASST. I was in a call debit spread between 2.5, 5, and 10s. It was pretty balanced. So I'm long 250 of the January 2027 expiration ASST 2.5 calls. I am long 150 of the January 5 calls. These are expiring January 15, 2027. So these are leaps. And I was short equal amounts of calls, 10 calls, same, January 2027. I was short about that 30 cents. So I started buying those back today, 20 cents, 25 cents, take the profits on those, basically lower the cost basis, to be perfectly honest. I had a Webull put credit spread. I closed that position. I don't want to get put stock. I'd rather buy the stock. Webull has 2x ETF. I traded that last week and made some money. Symbol is BOLG. So here's the Beyond Meat position. When the stock ran, I bought 300 of the November expiration $1 puts. I paid 10.5 cents for them. They're about 8 cents, 9 cents. So I'm going like, okay, what's happening? So when I bought them, they were like 450 IV in the implied volatility. Obviously, IV crush is happening. So, okay, I'm just going to, what do I do now? I don't want to, throw 30, I don't know, 3,300 bucks away. So what do? I went and sold weekly 1.5 puts. So that long put position turned into a put credit spread. I sold 225 of the 1.5 puts expiring Friday at 8 cents, 8.5 cents actually. They're about 4.5 cents. So stock is 191. If the stock is above 150, obviously those are going to expire worthless, and then I'm taking pretty much all my money out and then play with free money. But I'm going to do it again next week because I actually don't mind getting assigned Beyond Meat at 1.5 less the 9-cent premium that I took in, because the IV is still so high, like 350% on these weeklies. I can just sell a couple of rounds of cover calls and I'll be perfectly happy with all of that. And so yeah, that's the plan on this one. So we'll just wait, and if they expire worthless, I'll sell the puts again. I don't mind getting assigned 25,000 shares of Beyond at 1.5. This one I started accumulating this week, actually, or last weekend. This week, Fathom Real Estate or Fathom Homes, lower interest rates. They are the largest real estate brokerage, mortgage company, and title company in the Carolinas. They're expanding. They did a secondary at $2, so they don't have any cash needs. I started my average 11,000 shares at 172. I have another order at 152. So it's about 157. I'm in a naked strangle. This was a ordeal, although I'm coming out with my skin. Actually, my members are going to get a tutorial on how I manage this position, and stock dropping, I don't know, like 20% and me not losing money was a thing of beauty. And here's the bigger position on one of the DATs called Sharplink Gaming, SBET. I'm long 2,000 shares at 17.18. I'm short the 17 calls, 100 of them, weeklies. They're going to expire worthless most likely. But at the same time, I'm short 80 of the put credit spreads going out to January of 2026. Those are the 15 and 12.5s. And I took in about $1.60 for those. So with that money, I turned around and bought 80 of the January 2026 calls. But I've been selling weekly calls at nickels, 6 cents, 10 cents here and there. So I've been lowering the cost basis on the shares and the long calls. So the position is underwater pretty heftily, actually. But then, I do believe long term, well, especially by January, I think Ethereum is going to be higher than what it is. See, am I saying SBET is breaking out or anything? No, because SBET's only going to move if Ethereum moves, period. Last but not least, I was long 50 call debit spreads on SOLT, which is the 2x ETF of Solana. I traded that right. So my members, you should be proud of me on that. What I did is I was long 50 calls, but I sold 25, 27, 29, 31, 33 calls expiring at the same time last week. I bought them all back at about 30% profit. So now I let the calls go. In fact, what I sold was 10 out of the 50 of the calls at 260. I have an order at 260, 70, 80, 90, which will close the whole position with very nice profits. And but I'm getting ready for getting assigned some beyond, maybe. ASST is the lotto ticket. It did move from about 80 cents to $1.80. Now, the reason I'm covering the short calls back is they're going out to 2027. They're not going to go below 15, 20 cents. So take my 10 cents on that. That's 30%. Take my money. On the short calls, lower the cost basis of the long calls, and on any pop here, 400 options. I think it'll be a nice bag, but we'll see. So those are the positions, really. Just, trading around some positions, accumulating some things, and let them, let the market decide on what I can do or what I'm willing to do. So yeah, that's about it. And yeah, and let's go quickly to the charts. This is the S&P 500 daily, 1 year, 1 day. Stock walking up the upper Bollinger Band. There's an upper channel coming here about 70.50 or 7,050 on SPX. Are we going to get there? Potentially. MACD was throwing bearish divergence after bearish divergence. Finally, we broke out. Look, folks, don't argue with the market. Market's going to do what it's going to do. It's a little extended. Probably will be sell-off today. I have no idea. We may not. But long story short, this is that. Triple Q, same picture, really. The Mag 7 is kicked in. NVIDIA, new all-time high, $5 trillion market cap. Look at that, right? Palantir breaking out today. New high, all-time high. Apple very close to a new all-time high. Actually, it is an all-time high. Meta, very close to an all-time high. So all the earnings are coming out on these. Microsoft at an all-time high. Look, folks, don't argue, man. Don't argue with the market. Market's going to do what it's going to do. And I'm not foolish enough to say, oh, we're bearish here. I'm like, no. I can't be bearish here. I would like crypto to kick in, though. I've been patiently waiting. So hopefully Tom Lee is right. Ethereum goes to 8,000 by the end of the year, and then we're going to have a party. Because I have a full position on that thing, and on SBET anyway. If Ethereum goes to 8,000, SBET hits 25, I will have a 200% year. If not, then we'll be crying. But I place my bet, and then I'll let the market decide. My thought process is correct. I'm buying something at a 17, 18% discount, as opposed to, according to MNAV anyway, as opposed to a premium. I will never pay premium for these DATs. I don't know who pays premium. They're fools if they're paying premium. They go, oh, yeah, and it should be at a premium because they can do ATM sales, buy more Ethereum. All this buying of Ethereum of Tom Lee, in fact, Ethereum has gone down. Why isn't it going up? All this buying by Strategy and Michael Saylor of Bitcoin. Here's Bitcoin. Okay? Basically been sideways for months now. Months, right? And look at the MSTR. What is happening? Yeah, MNAV is getting crushed. Okay, folks? So pay attention to MNAV. Don't listen to these fools on X or YouTube or whatever. They have fucking clueless. They have no clue what they're talking about. They go, oh, yeah, this. Oh, yeah, that. I'm like, no, MNAV has been getting crushed. But then now when it dips down to 81, 82, 0.81, 82, 83 on a DFDV, it's another one I'm going to start accumulating shortly, or SBET and things like that. Yeah, I am going to jump on it. It's like if I buy SBAT today at 0.82, which is true. By the way, they have a dashboard you can go visit, and they put live dashboard numbers out there. That's like buying Ethereum at an 18% discount. They're not doing ATM sales because doing ATM sales under 1 MNAV is like eating your own flesh. Okay, so they could do buybacks, which they should, because that's how you will increase your ETH holdings. Now, you don't have to go buy ETH all the time. Just because BMNR is above 1 MNAV, which is about 1.3, about 1.2, They're doing ATM sales nonstop at the market stock sales and buying Ethereum with it. I get it. But I don't have to play that game. I pick my horse. This is my horse. SBET is my horse because I like buying things at a discount. I like buying $1 at 82 cents. When you're buying BMNR, you're buying $1 at $1.25. It's not my game. So especially when I'm trading options. But anyway, I have a full position and I want to be patient with it. That's all there is to it. But my account's about 70% cash, and I'm just gonna play the positions as I see them fit. I'm entitled to change my mind, obviously. That's why it's called trading. You know, you take losses, you take gains, whatever you do. But yeah, that's where the numbers are. And we're at 10:50. So I'm gonna go to the front, answer questions if there are any. If there's no questions, no questions. Okay. You guys play that way. Anyway, so 1:11, I'm going to be listening to the Fed's or JPAL's conference call or whatever it's called. And he's going to be gone, by the way, right? By May next year. There's going to be a new Fed chief. There's some candidates out there already. Again, think of it. Study this for me. Fed cutting rates may not be good. Figure it out. It may be good short term for asset classes. Okay? But in the intermediate to longer term, I don't think it's good. Because go study the history of Fed cutting rate cutting cycles and what stocks have done 6-8 months later. But today is the day. Party continues. Printing continues. Musical chairs continue. And I'm not fool enough to figure out when the music is going to end. It will end. Again, I'm not bearish. I'm unlike some perma bears and like, oh, this is bad. This is bad. That's bad. Well, it's been bad. So you can go pound sand. That's about it. So anyway, those are the positions. I'll post them at the end of the day. No questions. Okay, cool. Nobody wants to join. Cool. I'll go have a cup of coffee and wait for the Fed decision, and let's see if we get some volatility out of this. Okay, I'll be back on Friday. By then, market will have settled down, and you all have a great trading day. The rest of your day, have a profitable week. I'll see you folks on Friday. What's Friday? Trick or treat. It's Halloween. So let's see how the market treats us on Friday. And we'll see you guys on YouTube and X Friday Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Please go subscribe to the free newsletter. Please educate yourself. Please save your ass, your own ass. Nobody's going to save you. And do it properly. Okay? You don't have to YOLO. You don't have to get involved in any of this bullshit that's going on. Just invest. Just invest. Drip, 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 invest. If you want to play, have a small account. Go YOLO all you want. But make sure it's money that you can afford to blow. Because don't come crying after that. Yeah, that's it. Financial literacy, number one. And I always end these things with, may all your shorts tank and may all your longs rocket ship. So see you guys on Friday, Power Hour.